Hi guys, this video is on value for money analysis, or the 3 E's as we like to call it. So, no new knowledge when it comes to VFM. You hopefully remember from your previous studies that under this method we aim to measure performance not just under one but 3 different areas which are related between them, and each one of them begins with E, hence the other name, the 3 E's. So we would measure whether the organization achieves economy, effectiveness and efficiency, and for us at APM level, it's very important to not just know the definition of each of the 3 E's, but make sure we understand it. So we can apply that to scenarios, we can identify whether the 3 E's have been achieved, and of course, very importantly, we are able to measure that, so suggest key performance indicators that would work in context. So let's remind ourselves what economy is about. I hope you do remember this is about the input of the organization, where the aim is to source that at the lowest possible cost without compromising on the quality. So in other words, we have a financial tint here, and we are thinking how we can get the best input at the lowest cost. Imagine you guys are looking to buy a jacket because you cycle and it's winter, so you need a jacket that's going to be waterproof, keep you dry in the rain, and it's going to be high visibility so you get seen. If you want to achieve economy when you're buying your jacket, say you like a particular model, particular brand, you don't just go and buy it from anywhere. If you want to achieve economy, you don't also go and buy a substitute. Maybe you look it up and see where it is on sale, and you buy that same jacket, but if you buy it on a sale, you buy it at a discount. There you go, you have achieved economy. Now let's think about it from business perspective, or more from APM perspective. For KPIs that we might be looking to use, since we are thinking about our inputs and their cost, maybe a good suitable KPI would be for you to suggest cost per something, whatever the input is. And if we take a hospital, which is a popular not-for-profit organization that comes up in our exam, let's say the hospital wants to achieve economy, and if you think that the doctors, the staff in the hospital are their input, you may be looking to measure if they achieve economy by calculating the cost per doctor, average cost per doctor. Now let's think about effectiveness. This one is about the ability to achieve objectives, and that means it's whether the output is fit for purpose. Does the output work or not? Say you buy that jacket that you wanted to buy to keep you dry in the rain and seen in the dark. Well, you can say that the jacket is effective if you wear it when it's raining and when it's dark and it keeps you dry, and you do get seen by other road users from a distance. If you want to come up with KPIs under effectiveness, which you will have to in the exam, then given it is about achieving the objectives, look back at what the objectives of the entity are and think how you can measure them. Let's go back to our example with the hospital. A hospital is likely to have a lot of objectives, but let's just pick one for the sake of argument and say that the objective is to improve the quality of the patient treatments. So a KPI that they can use in order to decide whether the quality is good or not is by measuring the number of repeat treatments per patient. So, if a patient has been treated properly, once they get seen, they should never return for the same condition with the same issue. So the aim should be to reduce that in order to improve effectiveness, reduce the number of patients that return for a treatment. That would mean effectiveness. Okay, well, efficiency is next, and efficiency is about the link between input and output, where we're trying to get as much output as possible from limited set of input, or if the output is fixed, then we try to achieve that with as little input as possible. Say that jacket that you bought, yes, let's say it's waterproof, yes, let's say it keeps you seen in the dark, so it's effective, you got it. cheaper in the sales, so you got economy. Now, to achieve efficiency with that jacket, perhaps you can measure how many bike rides you wear it on. So the number of bike rides per that jacket. Your jacket is the input and the bike rides that you wear it on is the output, and you would be a lot more efficient if you wear it during a lot of bike rides compared to if just you wear it on, say, 10 or 20 bike rides and that's it. Okay, now let's go back to our hospital example and think about how that hospital can achieve efficiency. Let's say that we've got the input being the doctors, as we said before, and the patients or the patient treatments being the output. So maybe efficiency can be measured by patients per doctor or patients treatment per doctor, something along those lines, where, of course, to maximize efficiency, they should be looking to have one doctor treating as many patients as possible. Well, that's all wonderful, isn't it? However, we have to be aware of the performance management implications, which sometimes can create a problem. For example, as we said earlier, the hospital will have many objectives, and it is possible that sometimes some of those objectives are in conflict with each other, which means that while trying to achieve one and improve performance in that respect, performance in relation to achieving the other objective could suffer. So let's go back to the objective of improving the quality of patient treatments. But let's say they also have an objective of reducing the waiting times for customers. So they want, patients, right? You're not the customer of the hospital unless it's a private one. Okay. Anyway, so let's say the objective is also to see patients as quickly as possible, not to keep them waiting. Well, those two can contradict a little bit, because if you want to improve the quality of the patient treatments, presumably you need to spend quite a lot of time with each patient to be able to examine them, to find out what exactly is wrong, then to be able to treat them properly. But that means that if you're spending more time on a patient, then the other patients will have to wait potentially a bit longer to get seen. Now, there's possible conflicts not just between the different objectives. Conflicts can arise between efficiency and effectiveness as well. So imagine that, yes, you want to improve the quality of treatment, that's your objective, but also you want to improve efficiency, so you want one doctor to see as many patients as possible. Well, it's possible that while that doctor is trying to treat as many patients as possible, the doctor rushes them and doesn't spend proper time treating them, and that can lead to a negative effect on the patient treatment's quality. Or maybe the doctor gets very tired by having to treat so many patients, and then the doctor makes mistakes, which again can harm the quality of the patient treatment. Now, there's not always that case that efficiency and effectiveness will be in conflict, and not all objectives will conflict between each other as well, but just keep that in mind, because it could be useful for you when you're answering APM questions. You might get some ideas if you keep that in mind and look for it in the scenario. The very important thing to take away from this discussion is that value for money analysis aims to encourage improvement in performance, not in just one of those three areas, but trying to encourage the entity to improve in all three of them. So as far as the exam is concerned, as we mentioned it already, well, value for money is a very popular topic. It does get asked about often in many settings, and it's usually in combination with not-for-profit organizations, because they tend to use value for money analysis a lot. And it often is combined also with non-financial KPIs. So you might have to, quite possibly, explain what each of the three E's mean for some easy knowledge marks, and that's just about 3 probably. And then you will have to suggest a justified key performance indicator under each of the 3 E's. Sometimes you might be asked to suggest up to 2, no more than 2. And then you have to assess whether the organization achieves value for money, whether it provides value for money or not. So when you're doing this, of course, you have to consider whether based on each of the 3 E's, the KPIs you have suggested, they're good at each one of them, but also think about the relationship between the E's that we just discussed. And don't forget to look at all of them together to see if overall your analysis shows that the organization does or does not provide value for money. And because these questions are usually very scenario focused with very little knowledge that you can reproduce, you must make sure that you really think about what is going on and what the 3 E's mean, and you keep your answer as scenario focused as possible. So you don't suggest any general KPIs on any of the 3 E's, but make sure they're relevant to that organization and in their context. Keep in mind that overdoing the KPIs is bad, so if the examiner has asked you to suggest no more than 2, don't suggest 3 just in case, because your professional marks are going to suffer from this. Also, don't overdo under some of the 3 E's and have nothing under the others, because if they asked you to suggest a justified KPI under each up to 2, you would be much better off if you suggest 1 under each rather than suggest 2 or, God forbid, 3, as we said already, under one of them, and you've got none under another one. Again, your professional marks will be harmed, so make sure you consider that when planning your answer.